assuming that the peg is actually sustained, and really what it comes down to is the fact that the Swiss National Bank isn't new to pegs or de facto pegs. This time they've gone ahead and announced it, but previously they had tried to defend the 150 mark with the Euro-Swiss franc exchange rate, and we all saw what happened there. They were successful in a few times to stem the Euro-Swiss franc's decline to 150, but at the end of the day, you know, speculative interests and investors, when they were seeking that safe haven asset, they flocked to the Swiss franc, and it was too much. They overwhelmed the Swiss National Bank. And really the question comes down to whether the SNB has the will to sustain that peg when we think it's fairly likely it will continue to be challenged.
So in the meantime, how do you see the US dollar benefiting from this move?
So again, it all comes down to whether we believe the Swiss National Bank's resolve. If we do, it really increases the attractiveness of the US dollar as a safe haven play, just because of the fact that, you know, you're looking to an alternative for the euro because of all the troubles in the eurozone. All of a sudden, the previous fiscal crises that were previously limited to the periphery nations are now spreading to the core. I mean, we saw essentially what amounts to a speculative attack on French bond yields, which was previously unthinkable, but we've seen it. And now investors are really looking for that safe haven. That was previously the Swiss franc. If the Swiss National Bank is successful in keeping 120 in play, you know, the US dollar does represent a fairly attractive safe haven bet, given the fact that its correlation to equities, to the Dow Jones Industrial Average, for instance, trades at record strength.
So overall, do you see the continued rally of Swiss stocks over the coming weeks in reaction to this announcement? I'm
fairly pessimistic that the peg will work out. And really, I think it's only a matter of time that investors really test the will of the SNB and really challenge the 120 mark. And let's remember that the Swiss National Bank, perhaps for one of the first times in its history, posted substantial losses, and the local governments that previously depended on SNB dividends to cover, you know, budget deficits and what have you could no longer count on them because the Swiss National Bank had unsuccessfully tried to peg the Euro-Swiss franc exchange rate at about the 150 mark. It really comes down to whether or not they have the resolve to do it again this time. And really, I think that through the short term, maybe they're successful, but overall, you know, it's not only the Swiss National Bank that failed. You know, most recently it was the Reserve Bank of New Zealand that also failed to stem New Zealand dollar strength. Previous to that, it was the Japanese Bank of Japan Ministry of Finance. So you're seeing these unilateral actions aren't really taking grand effect over time, and that initial enthusiasm may be short-lived if this peg proves to be, you know, as flimsy as the last one, in other words.